that out. So again, I want to welcome you all. Come on a weekend and allow us take part of the time on your weekend, and hopefully make this something that is a kind of an eye-opening experience for you. Maybe learn something that you hadn't learned, or look at trading with a perspective that maybe you hadn't considered before. It wasn't until I kind of looked at trading a different way than I thought I was supposed to did I actually start making some traction and becoming a trader that can generate a regular income from trading. So it took me 7 years of struggling and failing to finally work around to thinking, you know what, maybe this trading thing isn't what I think it is. Maybe there's more to it, or something totally different about it than what I'm expecting. So hopefully you guys get a chance to pick up some little tidbits that I learned the hard way along the way. Couple of rules today. We're going to be doing a question and answer period at the end of the event today. I will not be answering questions during the event. Connor and Praveen are here, as well as many of our traders that trade with us in the trade room. Hold on just a second here. Got to take care of something here. Okay, so if you have questions, the first thing to do is maybe pay attention to what I'm talking about. Connor was telling me on Thursday, the first part of this event, on Thursday, people were asking questions in the chat, and I was giving them answers. It was part of my presentation, so the answer was being given as they were asking the question. So perhaps just kind of wait before you ask a lot of questions. Maybe there's a good chance I'm going to get to it. But if you feel compelled to ask questions during the presentation, Connor and Praveen and many of our other traders that like to come to these events, good morning, like to, or they'll be able to answer most of your questions for you. If you have a question specifically for me, you can hold that question, or Connor and Praveen will ask you to hold it and ask it again when I get to the end of the presentation. Okay, so we're going to do the presentation. I've got a new tool that we've created for market replay and for downloading market replay data for NinjaTrader 8 that I'm going to show after the presentation. So for those of you that are interested in using that tool among many other tools that we have that are going to be released, hang out and I'll show you quickly how that tool works and why it's so much better than what NinjaTrader gives you. Now, there is a market replay data downloader tool already, but it is independent of NinjaTrader. It's outside of NinjaTrader. This one is actually inside of NinjaTrader, and so it's going to be a much more useful tool and much easier to use than the other one. Okay, so I don't read the chat. I actually cover it up so I don't get distracted. Connor and Praveen will be reading the chat and answering your questions. And again, if I don't answer your questions, it's not because I'm ignoring you. It's just I just don't see the questions. All right. All right. Again, thanks everybody for coming, and let's talk about this thing about trading, and maybe it's something a little bit different. You know, it's real easy to make trading difficult. It's real easy to apply a lot of very complex and complicated algorithms and premise to trading when it's come to my realization over time that trading is some science, but by far it's more human nature and understanding human nature. And that's how you get good at trading. And it took me a long time to figure that out. Little history about me. I was a remodeling contractor for many years, and that's kind of a hard job. I had if anybody knows anything about construction or contracting, you generally are mostly just putting out fires all day long, and so that's what I did, and I was pretty good at it. But I always felt like there's got to be an easier way to make a living, and that's when I learned about trading. One of my customers was trading, and I thought it looked kind of cool. So I thought, well, I'm pretty smart. I'm going to figure this trading thing out in just a few minutes, and then I'll be able to quit my construction business and generate the same amount of income that it took me 20 years to work my way up to. Because trading looked pretty easy. Just when price goes up, you hit the button, and then when price goes down, you make a lot of money. And that looked pretty easy. So surely I could figure out what was going on and just know when to push the button, and I can just take it easy. So 7 years of that, and I never did get it. It was after 7 years I finally went, am I any better today at this trading thing? Am I seeing any more success than the very first day I started to learn this trading thing? And the answer was no. I'm no better than I was. So that was kind of an enlightening thing. I certainly had more information, but as far as executing consistently profitable trades, no, I was no better. Well, ultimately, something happened. Something very important happened. And then since then, I've been a professional full-time trader for over 9 years, going on 10. I ended up teaching people the things that I learned the hard way. And in order to teach them better, I started developing indicators and a trading system. So that's kind of who I am and how I got where I am today. So why is it that human nature creates such terrible traders? You hear this analogy or the statistics that 95% of people that try trading are going to fail. And I don't have anything to prove to me that that's true, but after spending as much time at it as I have and talked to thousands of traders, I generally kind of believe it. So why is it that us humans make such terrible traders? We generally feel like the something for nothing is a really good idea. It's very appealing to us. And when you first look at trading, it looks so easy that if I could just click the button a few times and make a bunch of money, that is a really good thing. I think I want to do that a lot. Okay, we all like the instant gratification. So if you could sit down for a few minutes and have more money than you had a few minutes ago, this really appeals to us. And if you don't believe me, go to Las Vegas and look at all the people sitting in front of slot machines. Okay, that's not just random people. That's the gambling industry taking advantage of people's human nature. Okay, and they've studied it and they know. We have a hard time with dealing with loss, particularly something that we work hard for. It hurts us. It makes us emotional. Okay, we're very quick to make judgments because it's much easier to do that than to actually spend a lot of time learning something. When we get fearful, we can get panicked. When we get panicked, we can get angry or scared or make very impulsive decisions. When we get angry, this leads to impulsivity and my favorite one, money makes us do stupid things. It makes us irrational sometimes. It makes us do things that we didn't know we were capable of. It makes us make bad decisions. It makes sometimes good people do bad things. So money is what we all think about a lot in trading, during trading, and we turn it into being about money. We never get away from it being about money. We tend to develop opinions very quickly. Many of you have probably already started developing an opinion about this presentation. Okay? You don't know where I'm going, you don't know what I've done, but maybe up to this point, I've not said what you want to hear. I've not shown what you want to see. So you're probably developing some sort of a belief about me and this presentation. Okay? And this thing that you believe is true if you want it to be true. We do this in trading also. We believe things to be true if we want them to be true. Therefore, we ask people to lie to us to confirm what we think we know. Okay? This is why you're going to have a lot of people doing this type of what I do, with teaching people how to trade and developing indicators and trading system things. You'll have a lot of people promising you that you're going to get rich at this because this is what you believe, right? And that you're not going to have to work hard at it. In fact, they're going to sell you auto traders where they're going to get you to believe, oh my gosh, this is the easiest thing in the world. All I have to do is buy this auto trader, turn it on, and go out and play golf, come back, and I get a bunch of money. We want to believe that. So we want to believe it so much, we're forcing people to lie to us to tell us that this is true. Okay, we do this. We all do this. Okay, we believe what we see. Okay, we're going to believe that before we believe what we're told by somebody who has experience. Okay? We believe we can multitask. Okay? Even though it's been proven that humans cannot multitask, we can do lots of individual things, but we shift our mind focus shifts from one thing to another. And I know you're thinking, well, not me, because I'm a little bit more special than everybody else. I can multitask, but you can't. But most of us believe that we can. Okay? And if there's a shortcut to something, we're inclined to take it, even if the risk is higher of it taking longer or being more expensive. We're likely to take that shortcut. Okay? So this is why us humans struggle so much with trading, and this, to be honest, this is probably 5% of some of the reasons why us humans make such terrible traders. Okay, so we all learn though a particular way, and we come into learning. So you have this desire to learn something, and so we're talking about trading today. So you have this desire to learn. The first thing that happens is you come into trading. Oh, and maybe you've heard about this trading thing. You don't know what you don't know. You have no idea what's involved. Okay? So you are unconsciously incompetent. You don't know what you don't know, but you do some research. You get some feedback. Maybe you go out on the internet and you start looking and you're watching videos and stuff. Suddenly you become conscious of what you don't know. You now know, oh, there's a lot to know. I need to know a lot about this stuff, and I don't know anything. Okay? So now you're consciously incompetent. Okay? So you get more feedback. You begin to practice. and you become consciously competent, meaning you know, but you have to think about what you know. Okay? In order to execute, you have to say, okay, this is this way, this is this way, this is this way. Okay, because this, and this, I'm going to do this. Okay? You're consciously competent that you know what you should be doing. Okay? And then with experience, you eventually become unconsciously competent. You do the right things without even realizing you're doing it. You've mastered a skill without having to think about what it takes to execute that skill. Let's use a quick example, driving a car. Okay? When you're a kid, you don't know what it takes to drive a car. Eventually you figure out, well, it takes a lot, and I don't know how to do it. Then eventually you start taking driving lessons, and maybe you pass your driver's test, and you know what you need to do, but you have to think about every single thing you're doing. And eventually, with experience, you could drive a car without ever thinking about how many times you turned on your blinker, or how far away from the intersection before you started slowing down, or lights, or how many times you turned, or how many hands were on the steering wheel, or what gear you shifted into, or whatever. You don't think about it. You just do it. You get from A to B without ever thinking about that. In fact, you're probably on your phone, or listening to the radio, or looking at a map or whatever. Map. Huh. That's how old I am. I still have maps. All right. So most of us have these two stages of learning, especially learning trading down pretty good. All right. So we're unconsciously incompetent, and then we realize how incompetent we are. So we got that down. The problem with us humans is we don't really want to take the path to learning. We're going to go from unconsciously incompetent, and we want to skip the other steps and go straight to unconsciously competent. And you want to do that by watching a webinar, buying some indicators, watching some videos. You just want to become competent. You don't want to learn anything. You just want to know stuff. If you ever feel like the guy with the barrel here, there's a good chance it's because you've gone to a lot of trouble and spent a lot of time trying to shortcut these stages of learning, okay? So for what we're going to talk about today, we're going to make some assumptions, okay? For the sake of this discussion, so that we can have some clarity. We're gonna have some assumptions. What assumption is that most traders are people? Okay, yes, we know that there are electronic trading out there, but by numbers, most traders are people. Okay, people have emotions and suffer from human nature. Okay, that's an assumption we're going to make moving forward today. Most traders struggle and quit trying before they see success. That's not really an assumption. That's proven, statistically proven, but we're just going to use that as an assumption today. Let's also make the assumption that there are a lot more amateur or struggling professional traders than there are successful ones. I think you can go out there on the internet and you can find all kinds of people that say they're successful traders, but when you actually get down to meeting them, you're going to meet a lot of people that are amateurs or struggling traders than you are that have actually made it. Okay? There are a group of people or companies that can manipulate the markets. Let's make that assumption. That market manipulations are inevitable. That's how they make their money. Human nature will cause people to react to these market manipulations. Okay, we're going to use all of these assumptions. Oh, and the most important one. How many of you believe that human nature is predictable? If you go into a group and something happens, do you generally feel like you can predict what this group of people is going to do? Most of us know from experience, we have become unconsciously competent at understanding what a group of people are likely to do, or a person is likely to do under a certain circumstance. Maybe you saw the mailer that went out announcing this event, and there's a guy on there punching towards the camera. It looks like you're about to get punched. Human nature is going to have us want to protect ourselves from that harm, and we're going to do something predictable. We're gonna try not to get punched in the face. So that's predictable. All right? If somebody comes at you in anger, the chances are you're going to get angry too. All right? You're going to react predictably. So human nature is predictable. So these are the assumptions that we're going to go on today. Here is an example of people acting predictably. See, these people likely don't even know each other, right? But it's their nature to react to something sudden and unpredictable like this. Sudden and unexpected. All right? It's their nature to protect themselves from harm. Here's the same thing. People's nature to protect themselves from losing money or for cashing out and making a profit. These people are, when you see a confluence of events like what I'm showing you right here, this confluence of events right here, it's people's natures to act a certain way when this happens. That's our edge. That's all we're looking for, and I'm going to show you that edge in just a few minutes. I'm going to show you that edge in action in our trade room. Okay? But first, let's talk quickly about these market manipulators. I touched on this a little bit on Thursday. What are these guys doing, and why are they manipulating, and why is it important? All right? I'm going to show you why this is important to what we do. Very important to what we do, and understanding that the market manipulators are doing this for a specific reason. They want to create a reaction because humans react predictably. So if they do this, they're going to create a predictable reaction that they can take advantage of. All right? So this is one of the many ways these market manipulators manipulate the markets. Now, this is an exceptionally oversimplified way for the sake of explanation. But if you go look at any trading chart, there's a good chance you're going to see some patterns that look very much like this. All right? So down here we've got these areas of accumulation where the market makers, the guys with all the money, are buying up all the available assets for this particular instrument. They're going to do their magic, and they're going to run price up a little bit, and then they're going to very quietly, very stealthily buy up more of the assets. Okay, this is called accumulation. They do this very low volume. To you and me, it looks like nothing's going on. We're falling asleep, we're bored, but something is going on. Then they do their little magic again. I talk about what they do on these up thrust bars on another webinar. I'm not going to go into all that today. Then they get into this area. They've already bought all these assets down here. Okay? They purposely run the price up. They can because they control most of the assets. And then they start very slowly, very quietly selling them off. They don't want to do a bunch at once because that'll affect the price. They're going to do it a little at a time. They're going to try to keep the price up in this area. until they've made their profit from all of their everything they've accumulated down here. They make their profit up here. Now, they've made as much profit as they need to make. But at the last minute, they do their little magic. They run price up one more time, and then all of a sudden, they unload. They still control the majority shares of of this asset, so they can still run price up, and then they dump the entire thing back on the market. Everything they have, they dump it on the market, so that supply overwhelms demand, which everybody knows drives price down, so they can do it again. Okay? This is very important for what we're doing. All right? We're looking for these manipulations here because people act predictably, because generally they're sudden and unexpected. All right? Because of human nature. Now, let me back up for just a second. I want some of you, I'm going to actually uncover this, and I want you to tell me, what is a trading chart in one sentence or less? Or two sentences or less? Anybody? Anybody want to try this? What is a trading chart? All right, well, I'm just going to move on. A trading chart is not what most people believe it is. A trading chart is very simple. Very simple. All it is a graphical representation of what people or institutions are thinking about the price of some security asset at a particular point in time. That's it. That's all it is. Don't try to make more out of it than it is. So when we look at trading charts, we've got to understand that it's just a measurement of people's thoughts, feelings, and emotions. So when I look at this chart, I see something. I see price stop at particular places and change directions for what appears to be no apparent reason. So I see these areas and I'm thinking, what the heck are people thinking when this happens? Or, more importantly, not when it happens, just before it happens. Because then we can see that there's some reaction that's happening. The reaction is precipitated by these big moves, by these manipulations. And then people are reacting predictably. So I started measuring what was going on in all these bars just before these sudden and unexpected moves, or these moves that for no apparent reason price just stopped and changed directions. So after starting to measure these, I started finding ways to put on the chart when particular circumstances were in place during these big manipulations or these big moves. And when I started finding a confluence of these circumstances, then I noticed that price would pull back a little bit. And it did it over and over and over again. Very predictable. Okay? So here's a little video of people acting predictably to, I actually ran this ahead a little bit, to sudden and unexpected. This is our trade room, okay? So this is early trade room video. You'll notice right here, it is blurry, and I apologize. That's just the resolution of the video. We see prices being manipulated, okay? We see that's the speed tick. We see an oversold condition suggesting that the weakness is setting in. Right there is where I put my buy order in. That's our rock star indicator suggesting that all of the conditions are met for a rock star trade setup. Okay, So I entered the trade here. All I need is this little move right here. I take a little piece of the market out, I put it in the bank, and then I wait. Okay? People reacting predictably. Okay? Here's one. This is all the same day in the trade room. Here's one. Price dropped hard. We have a manipulation. The speed tick is telling us that price is likely manipulated. We have divergence with our divergence. And I'm going to talk about these indicators a bit more. I just wanted you guys to see what it looks like when people act predictably to a sudden and unexpected. People were very comfortable with this right here. Price is just churning around, and then suddenly, whammo, price drops. We get an indicator of confluence of conditions, and off it goes. There's another one up there. There's one. Price drops. Market's being manipulated. We have divergence. Boom. And we don't need it to move a lot. We just need to be consistent. We build on consistency. We're not looking to make a lot of money on each trade, nor are we going to lose a lot of money on each trade. We're building consistency. We want to get we're winning 80% or more of our trade setups because of the high probability of these small moves. These moves are generally ignored by most of the public because they don't believe that they have to make a lot of money on each one. I used to do that for 7 years because that's what I kept being told. I had to make a lot of money on each one, on each trade. Wasn't until many years later that one of the guys that was telling me that finally admitted, well, you can't really make a lot of money if you're a small lot trader going for a long, going for a lot of ticks. Nobody told me that. All right, so these are all examples of people acting predictably to sudden and unexpected events. There's one. And you notice they all look alike, kind of. It's not like you have to learn a whole bunch of different setups. And we put all the information that you need right in front of our YouTube site. We have trade of the day videos. Maybe Connor can put the link up there. And we have a whole bunch of those. Okay. So let's go through now the steps to actually placing these trades. All right, remember we had these assumptions, okay? Some of these were just assumptions that we could actually turn into a premise for building a trading system around because we know for a fact that they're true, okay? It's no longer an assumption. Some of these are no longer an assumption. We know them to be true. So we're going to talk about this, the premises that we use for building our trading system. All right. First thing, the longer you're in a trade, the more speculative it becomes. If you ever spend time hoping that the trade is going to go your way, then that trade has become speculative. Okay. So we want to get in and out of trades as quickly as possible so that these market makers don't come in and do something sudden and unexpected while we're in a trade. These guys can do whatever they want. How many times have you been in a trade and you've been going and it looks like it's going in your direction and suddenly something happens out of the blue? You don't even know why it happened, but suddenly you were headed toward your target and suddenly it's just the bottom's dropped out and now it's going the wrong way. The longer you're in the trade, the more speculative it becomes. So we're going to also use that the markets are regularly manipulated to create a reaction from retail traders. We know this to be the case. Retail traders' reactions are predictable because we're human. We also know trends never move in one direction. I'll show you why this is important. Market strength always leads to weakness. Always. Measuring that strength, we can anticipate weakness. Consistency is better than occasional big wins, and small wins add up big. Okay, that's what we're going to base the rest of what we're talking about today is based on these premises. Okay, our trade setup is just stupid easy. The whole trading system is just so easy. We've made it to where it's a very logical, step-by-step decision-making process that is very much like everything else that you do in life, and gone to great lengths. You may notice our indicators just pop up on a chart and they tell us something. There's an awful lot of stuff going on in the background. But what we've done is we've taken it to where we only put in the indicator, or the indicator only shows on the screen, what we need to know. Okay, what we need to know to make trade decisions. All right. So remember we said that trends never move in one direction. Trends always pull back a little bit. So we're looking at measuring the strengths inside of a trend so that we can anticipate the inevitable exhaustion every time we measure that strength. Okay, so how are we going to do that? All right, here's step one. We're sitting in the trading room and we start to see a push like this. Notice these dark bars, they're getting lighter and lighter and lighter. This is our Mo-meter indicator. The lighter the bars get, the more inevitable a pullback. Okay, that weakness, we're seeing strength, 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 but the markets can't maintain that strength. They cannot. Why not? Because people start taking advantage of this sudden and unexpected situation here. Either the trade is going against them and they're getting stopped out, or they're bailing out because they're getting scared, or they're taking profits. So no matter what, price isn't going to keep going up. All of those things are going to happen, which is going to cause price to pull back. Okay, so we're measuring the strength. We're looking at how much price is changing inside of each bar. So we're measuring the velocity of the bar. We're measuring that there's a lot going on, or a lot of orders being processed inside that bar that are being processed faster than most retail traders could possibly trade. Right? And if that's the case, then the big boys must be doing it, because they have these supercomputers inside the exchanges or next door to the exchanges, and they take every advantage to be able to place trades much more quickly than we can. Those are the footprints they leave behind that we're tracking. Okay? Now, inside that was supposed to say inevitable exhaustion. Inside that strength, we want to start measuring inevitable exhaustion. When price gets overbought or oversold, this is our OBOS indicator. We're going to print it right on the bar, saying that, okay, price is now overbought. This is where exhaustion typically sets in. Okay, so we have a confluence of a big push, exhaustion, and manipulation. We also have our pullback alert indicator. We're reading every single tick that goes into that bar. When we get a type of volume coming into that bar, buying and selling volume, a churning volume where buyers and sellers start to fight with each other, that's where exhaustion is imminent. Okay? The buyers are obviously getting exhausted. The sellers have been just sitting up there waiting. All right? Then we have a divergence. Now, this divergence suggests that even though we have this upward trend, the momentum has actually shifted directions. All right? So this tells us that exhaustion has not only set in, but it started moving the other way. And when that happens, price is generally out of gas, and it's going to follow. The momentum, and that's it. That's where and now we have a new indicator called the rock star that would also print here. Right here is our trade setup. Right here. We do it all the time, every day. And it doesn't change. We've been doing the same thing for years. So our speed tick indicator, you saw that little white arrow. This is our speed tick. This is our order flow analysis indicator. It's reading the rate of the orders that are being processed through the exchange, okay? Not level 2 orders. These are not orders where they're playing around with them, putting them on, taking them off, okay? These are actual orders being processed through the exchange, and we're measuring the speed at which those orders are being processed. And when we hit a speed that we know that retail traders could not possibly process orders that fast, we're going to generate a speed tick on the chart. Okay, that speed tick is generally going to tell us when the manipulations are happening, and we already know that if they're manipulating those bars, they're doing it for a reason. Okay. So using that same histogram, this histogram that I created for the speed tick, I noticed when I was developing the speed tick, I noticed that maybe the orders don't come in as fast, but they accelerate to a certain level or accelerate beyond what we were doing previously. A sudden acceleration also causes a pullback. Okay, so we have our relative order flow. So relative to what was going on previously. We have our divergence indicators. Okay, divergence is probably one of the, if not the most important part of our trading and one of the most powerful indicators in trading. Reason being is that it almost always follows that if momentum is moving a different way than price, that price will generally follow. So for those of you that don't know what divergence means, here we have price and here we have a momentum oscillator. Typical that they agree with each other, right? That we're setting higher highs with price, higher highs on the oscillator. When they get out of agreement with each other is when that gives us a heads up. A heads up that price is likely to follow momentum when they get out of sync with each other. So I used to try to find indicators that I could use to put on charts to read momentum, and man, it was so hard to find something that worked and gave me definitive information exactly when I needed it. I kept getting stuff where I had to have the oscillator on the bottom of the screen, and it would draw lines and draw them backwards, and usually several bars late. Okay, so this was very typical. So I took that, and instead of having to have all the lines on there, we just say when a condition exists. Now these print on the open of the bar that they're on. Okay, so at the open of this bar, we get a divergence signal. So that's our flash indicator. I took that, it worked so well, we applied it to another oscillator, the MACD, and it also will generate divergent signals at the open of the bar. Okay, so we used the flash and the MACD for several years, and people kept asking me, well, what about these other momentum oscillators? Can't we, why are you only using two? So I thought, well, you know what? We'll use the same algorithm, but we'll create an indicator that uses all of them, all of these momentum oscillators, and it'll tell you how many of them are in agreement that there is divergence. Okay, so that 3 of these momentum oscillators are suggesting that we have a divergent condition here. There's only 1 here, but there's 7 here. Okay, so this is our super D. The super D is inside the rockstar indicator, by the way. Then we have our major areas of support and resistance. Okay, this is where we feel like if weakness is going to set in, price is going to have a harder time crossing these lines when the weakness is set in. Okay, so we want to be measuring strength to anticipate weakness. So we like to see a big hard push into a line, because this is like trying to sprint up a hill, and then you think you're at the top of the hill, you're exhausted, but to get to the top of the hill, you're going to have to climb a 10-foot wall. Okay, and you're just like, oh, I just can't do it. All right, I mentioned our overbought, oversold indicator. Instead of having to have an oscillator and see just when price has exceeded these extremes, we just put it right on the candlestick. Remember, I talked about the market manipulations. Well, that's what we're reading here. Okay, we're reading inside these bars every single tick. And when the buyers and sellers at these points get out of sync, start fighting with each other, that's when price pulls back. All right, so that's what these dots are for. You'll notice that you don't see volume indicators on my charts. That's because they're all inside of these dots. I only use the volume that I need to make a decision and get rid of all the rest of it. Okay? So, and then we have our new indicator. I've been trading this for years. Many of us have been trading this for years. So I didn't, and I got very comfortable with this, and the rest of the trade room was pretty comfortable with this. And that this has a number of different indicators here, but this is the confluence of events that we're generally looking for. We had people saying, well, can't we combine all of these so that when we get a signal, we can just generate a signal? I thought, well, I can. I don't know that it's necessary, but shoot, why not? So I went ahead and I created this with all of these indicators inside of it. Turns out it was a really good idea. People love this new Rockstar indicator. And we use it in the trade room, and it has absolutely helped everybody's trading, including mine, which I didn't even think I needed it. But it makes things so clean and easy. All right. We want to invite all of you to our trade room. Check us out. We'll give you a free week to come hang out with the nicest group of traders you'll ever meet. Really proud of our trade room and our traders. You can see us doing exactly. You ever been to a webinar and you go and watch this guy and you go, oh, that looks pretty cool. That's very interesting. I think I'll go to his trade room. And then you go to the trade room, and it's nothing like what you heard in the webinar, or it's much more complicated, or it's, you know, something that you're not really that interested in. When you come to our trade room, you're going to see exactly what I talked about today. You're going to see the same indicators, the same setups, the same way we do it over and over and over again, and have been for years. We've gotten to be the best in the world at something very small. We do it over and over and over again. So we build on consistency. You can come watch us do it in the trade room. By the way, we all call out our trades. I'm on the mic. Connor's on the mic. We call out our trades before we get into a trade so that you'll know what we're doing. All the traders in the room, not all of them, a number of them. A lot of them don't type anything because they're busy or they don't like to type. But a lot of them do, and they'll put in when they take winners, when they take losses, they'll type it in there. I always tell people if they're typing in winners, they better be typing in losers too, because you don't always win every trade. We just have an edge against the markets. We don't have a crystal ball. We have an edge. We have a strong edge. But we don't know always what the markets are going to do. So you can come watch this in the trade room. We've got some special offers. We had a couple people already take advantage of this for Thursday. We've got our pullback bundle, and we're going to throw the Rockstar in to the pullback bundle. It has all of these indicators, which we talked about a lot of them here. We got a month in the trade room that goes with it. Our regular is $27.65. We're going to do it for $24.88. We also have our VIP package. Has all these indicators. It includes the Rockstar, and it includes unlimited access to the trade room. Any indicators we develop in the future for the trade room, VIPs get for free. For example, this Rockstar indicator that we just came out with, all of our VIPs have already gotten it for free. Okay? Our essential add-on suite, I'm going to show you one feature of that here in just a few minutes. Our essential add-on suite, our VIPs get for free. Okay, there's like 6 different add-ons in this suite of tools that we've created. Our weekly group mentoring called our Aha Moments sessions. This is where I teach you those ahas that I had going from horribly losing, miserable trader to actually being able to generate a consistent and regular income. Okay, this started with a series of ahas, and these are what I talk about in our mentoring sessions. We also have an accelerated learning program called the Fast Forward. This is a self-paced, but it requires work. It's not watching a video or group of videos. It's actual things that are actionable, that practice that you do every single day, and we give you the tools to do that practice with. Okay? You get priority support as a VIP. You also get, when you get to a point where you feel like you're ready, I'll sponsor you at a Top Step Trader Combine. See if you qualify for a funded trading account. Okay, so normally this is $52.50. We're gonna do this for $47.25. Now, yesterday we had we were doing this Thursday. This is the same special we did on Thursday. We had 2 people already take advantage of the special, so we've got 3 left. I think. I keep hearing the cash register go off, so that's an app on my phone. So maybe we had a couple more take advantage of it already. But anyway, right now we've got 3 left that I know of. Connor can help you out with that. If you have any questions, send him an email down here at secondbrain@theintentionaltrader.com, and he can answer your questions for you. If these packages don't appeal to you, you want to start out a little bit slower, send us an email. We do have some other packages. These are by far the most popular, but send us an email, and Connor will work with you on some other packages if you're not interested in one of these. Okay. All right. So that's the crux of the presentation. Before I take questions, how about we all go take a quick 2-minute bio break? That sound like a good idea? Awesome. Okay, so 2 minutes. Let's take a real quick break and then I'll come back and answer questions. Run, everybody run. Okay, I'm going to take the first question. Eileen, how many ideal setups occur per day? Just watching two markets. Well, we want 6 in the trade room, actually 5. It's pretty easy to watch all of them at once. I don't know why you'd only limit yourself to 2. Um, we do, however, know that people don't want to be overwhelmed. So you certainly could focus on just 2, but what happens is if, especially as you become more competent, more unconsciously competent, you could actually trade 3, 4, 5 markets at once. So that being said, um, I will average between 2 and 8 setups a day. Typical is going to be maybe 5. Yes, in fact, Erwin, we have a Forex package that you can only trade Forex with. That's a little bit less expensive than our regular pullback bundle. So contact Connor and he can set you up. We call it Bunt X. It's on our website. Um, and you can take a look at that, but he can extend a discount offer to you um, for the Forex. Yeah, you would need, if you want to trade Forex and futures, you would need the regular bundle. But if you only trade Forex, we do have a bundle for just Forex traders. Yes and no, Donna. Um, you say the original market replay. Which market replay is original? Um, then they do plot in real time. The only problem is when you hit refresh, because our indicators. See, NinjaTrader to save time only. Oh, you mean the downloader? The replay downloader. Not the replay player, which is inside an NinjaTrader, but the downloader. Yeah, that works fine. The only thing is that, yeah, it works fine. The NinjaTrader likes to refresh the charts very quickly, and so when it refreshes, it only reads high, low, open, and close of a bar, where our indicators generate on the actual tick where a condition exists. So on refresh, sometimes our indicators won't print because that particular tick was excluded from the refresh. So that's one of the downsides of having these high performance indicators like this. Randall, okay, here's what only thing I could express to you about winning percentages. The Rockstar is not an auto trader. The Rockstar says when a confluence of conditions exists, it's up to you and your risk tolerance and your trading rules as to how you're going to trade that Rockstar. We do not trade. I don't trade every Rockstar signal. Okay? Because if you remember, you go back to step one, I'm going to look for a hard push into a line. Reading the markets like that is not part of the Rockstar. Okay? I want to see a strong push. Let me see if I can. See that? I want to see this strong push into the line. That's not part of the Rockstar. So conceivably, I could get a Rockstar signal down here somewhere, and I wouldn't trade that because I don't have that hard, that strength coming up here to anticipate exhaustion. So if I get a Rockstar over here, I'm going to ignore it. Okay, so I don't trade all Rockstars. Risk to reward ratio. Well, what's the assumption you're making with a risk to reward ratio, Randall? There's something that people never ever talk about when they discuss a risk to reward ratio. But there's some glaring omission in that question. The glaring omission, I'll go ahead and tell you. You're making an assumption that when I put a trade on, I sit on my hands and I wait. Okay? I wait for price to either hit my target or my stop. And that's not the case. I will manage my trade relative to the current conditions. So then what happens to the risk to reward ratio? It goes out the window. Velocity, Robert, is price changing regardless of orders being processed. Okay, I'm just reading how quickly price is changing. So I don't need a particular. I'm not reading the actual orders being processed. I'm reading price. Donna, no, you can. There's as far as how fast to run it, you're going to get a little bit more accurate at 1x. But I'd go up to about 20 without any real problems on the replay. Sorry, I'm coming down the line here on questions. Do you have any plans to automate your signals from the Rockstar indicator? Yes, I do. But I have some other things to accomplish first. But yes. Now, You can't just take the Rockstar, and we get this question a lot. Can't just take the Rockstar and use NinjaTrader Strategy Builder because we don't use the plots that NinjaTrader provides. We've created our own plots because they're better and more accurate. You have to use NinjaTrader plots in order to use their strategy builder. Number two, you have to do calculate on bar close for their strategy builder. We run on every tick. We're reading every tick. So there again, you can't use the strategy builder for that. We have to have a custom strategy. So, and it's on our list of things to do. Yes, Julius, the Rockstar is available as a standalone. Send us an email and we can get you hooked up. One of those trade setups that I would ignore. I'm just going to scroll through this video here real quick. Maybe I can find one that I ignored. Well, here's one that I ignored, not for that particular reason, but I didn't have a whole lot of other confluence here, just a Rockstar. So I didn't trade that one, although it worked. I think I traded those. Traded that one. There's one. There's one that I would not have traded. And it's real easy to see them in real time. When you're trading, you just see it pop up there and you just ignore it. I mean, it's only saying that a particular condition exists. I think that's the same one. There's one. There's one. So it's just saying that a condition exists. It doesn't mean go take a trade. You know, it's not an auto trader. The actual probability of winning the trade. I can tell you what I'm not going to tell you what I do because that would be, I don't know, you probably just figure I'm being dishonest or I could say anything. I could tell you that many of our traders report to us on average. I have no proof of this, okay, other than what they tell me. On average, about 80% winners. That's all I can tell you. I'm not going to tell you how much money they make or whether they're telling me the truth or not. I don't know. I just know what they're telling me. Usual profit target and stop. I start with a bracket order of tick target with a 7-tick stop. If I'm in the trade for a period of time and the conditions that got me into the trade change, I'm going to start moving my stop shorter. Never out. Gershon, you probably could, but a lot of people have been trying to build strategies like that forever, and markets generally change. So to me, you know, there's a very few circumstances that I would build an auto trader. In fact, I'm working on one now, and I'm only doing it because the events happen so quickly that I am unable about half the time to take advantage of it because it happens faster than I can react. So under those circumstances, I look for an auto trader. If you want an auto trader to remove yourself from accountability or from decision making, I don't really see those working a whole lot. But you could certainly try. I mean, I wouldn't begrudge anybody trying. Yes, 1 minute charts. I call out trades, Julius. I am not a CTA. I'm a trader. And this whole thing started by me sharing my screens with a group of friends. And we all shared our screens with each other. And we just talked. So that's what we do in our trade room now. I don't make recommendations. I do not recommend that anybody ever trade with live money. Okay? That's totally up to the trader. All I do is tell people what I'm doing in the room. And they could base it on and I also tell people to, get comfortable maybe using my rules, and then you can massage it a little bit to use your own rules to still trade within our system. All right, so I don't trade on the charts in the trade room. My trading computer is separate than the charting computer, which is projecting charts. But I do tell people before I enter the trades what trade I'm going to be entering if certain conditions exist, and then I'll tell them that I'm in the trade, and so I do talk it out as I do it. No, I don't. I don't track the success rate of the trade. You could do that, or our traders. We have the same people that have been coming for years. They could do it if they wanted to. Anybody could do it that wants to. I don't have time. Donna, I've never traded 30-second charts, and no, I probably wouldn't recommend it. What I generally do is the markets haven't. We've had very fast days or very fast segment of days. And we generally will know when to step away see, this whole trading system that we do, this whole premise that we're operating under is based on typical market conditions. All right. And it's many, many years of typical market conditions. When the conditions get outside of typical, like they can over the past few weeks, we'll just stop trading. We'll just step away for a little bit, let things settle back into a more typical. We never force anything. We want to make sure that things are running the way we know we have an advantage. Okay? And changing how we trade just to accommodate this atypical market would be a mistake. Now, if they changed permanently, I would absolutely make the change necessary um, to dial back in on my edge. Okay. All right. So it looks like I've gotten all the questions. Did I miss any questions? Anybody ask a question that I missed? No? Okay. So as promised, I'm going to go through this again. Um, This is our new essential add-on suite. You don't notice anything right off except for you don't see all the words up here at the top. I'm just going to show you. Oh, sorry, Andrew. What was your question? Maybe ask it again so I don't have to scroll up and search for it. You can learn to trade this method if you have a job during the trading day. That's what our fast forward program is for. No, if you're anticipating setting alerts and walking away, you cannot do this. This is not a good system for you. This requires you paying attention and dedicating yourself to what it is that you're trying to accomplish. This is not something that you could do haphazardly. You have to pay attention, even with alarms. I hate alarms. Oops, what happened? Oh. Okay, so this is NinjaTrader 8. You'll notice it looks a little bit different. We've got a cool feature where we can boost the performance. We've got an exit button. We've got a save and restart button. But more importantly, we've got a set of tools here that doesn't come with NinjaTrader. Okay. So I'm going to click on the download a replay data manager. I have no idea what you're talking about, TJ. Um, so if you guys have used the market replay data downloader from NinjaTrader, you've suffered with it, and you realize how painfully slow it is uh, to use. Perhaps you've also used our market replay data downloader at marketreplaydata.com. Much better improvement, but it is a side. It is not integrated with NinjaTrader. This particular application is now integrated with NinjaTrader. Okay, this is our replay data manager. It does more than just download the data. So all you got to do is just find the instruments that you want to download data for. Probably already have it on the list. Whoops. So I want to download a couple of days maybe of last week. For each of these, I can just select which day. So I want to go through from the 8th to the 9th. So a couple of days. You know, you can do this as long as you want. And just go ahead and hit download. Now, the nice thing about this is if you are connected to replay data when you download, Ninja won't allow you to do that. That'll just gray it out. This will allow you to download it, but what we're just going to go disconnect you from the replay data. All right. So let's do that again. All right. So right now we're connected. We're going to download the data. And we got a pop-up that tells us that we've been disconnected and we need to reconnect in order to continue running playback. What that does is it resets NinjaTrader to understand that this data is now available. Okay, so that's all of this is inside of NinjaTrader with our add-on suite. We also have file management inside. Okay, so I can now go in and I can delete files, or I can delete entire folders. So you don't have to go and path your way to a folder inside of NinjaTrader to remove and clean out some of your stored data. You can do that all right here now. So this is a handy little tool for those of us that that do a lot of replay. Let's do this. You'll be hearing more about that coming up. We've got a whole bunch more tools inside of that add-on, and it's going to be cheap. Dale, your best win, 5 ticks. Your best day, I won the first 3 trades of the day, I don't know, last week. Any lost day in the last month? Of course. That would be unrealistic to expect me not to ever have a losing day. Yeah, it is, Maggie. So I work with it a lot. And it's horribly frustrating. And have been having an ongoing conversation with the guys at Ninja to see if one, either they're going to fix it, or two, it can be something that we add into our this add-on suite so that we could have another replay utility down here. Ninja just has to give me a little bit of access to some of their controls, and then I can add a much better replay um, uh, tool. So actually, just before this event, I was talking to my programmer about that. Yes, it is much better in Ninja 7, very bad for Ninja 8. Lots of people are upset with it. Ninja doesn't seem inclined to do anything with it at this point, but I'm still talking to them, trying to get them to change their mind. No, only the VIPs, Donna. Yeah, you could either upgrade the VIP, Donna, or you could buy the Rockstar. Any other questions? I'll stay here all day. Yes, Jerry. Yeah, Connor will be sending out an email later this afternoon. Oh, or within an hour. What do you feel like I might not have covered? It's right here, Edward. It is inside the Essential Add-on Suite right here. And that's not quite released yet. We've still got a few weeks to go on that. All right. Well, I appreciate it. And I hope this was somewhat eye-opening for you guys. You know what? It boils down to make a little bit of money, put it in the bank. You know, the most dangerous place in the world is to have your money in the markets. Trader clicks on CO dome, reflects it without having too many domes open. Oh, that would be cool, wouldn't it? Gershon, do me a favor. I am collecting suggestions for the EAS, which is what we're calling the Essential Add-on Suite. You will be hearing a lot more about this in the coming weeks. This is such a cool tool, and we're going to be adding to it regularly. Um, the Send me ideas because we want to continue to build ideas, build on people's ideas, and if we use one of your ideas, you get a free year of the add-on suite. We'll give it to you for a free year. Oh, well, you get it free anyway. Just keep the ideas coming. I'll just keep making it better for you. It's extra free. Yeah, and don't forget, if you don't see something up here, a bundle that you're interested in, we do have more bundles uh, that Connor can talk to you about. I think around about $9 or $10 a month. George, somewhere in that range. Pretty cheap. We have some other cool stuff. This is one that we're working on. Do I even have it on here? We have something that's like the static superdome that you aren't going to have to pay a fee to use. It's not a static superdome, but it's just like it. But that's not going to be released in the first version. All right. Well, everybody have a great rest of your weekend. I had a good time today. I hope you guys did too. We'll be in the trade room first thing Monday morning and hope to see a bunch of you there. If you've got any questions, Connor and I are actually planning on doing a lot of work this weekend. We're working on a new website and stuff. So if you got any questions, feel free to shoot them over. We'll be here. No, no. Everything we're doing now, Donna, is NinjaTrader 8 and forward, and the Rockstar is brand new. Most of what we're doing is taking advantage of the new architecture for NinjaTrader 8. So we're not working backwards. We're not doing any backwards development because that's spending an awful lot of time on something that's going to be obsolete relatively soon. I know they're still supporting it and people are still using it. From the polls that I have done from our users, most have already upgraded to Ninja 8. I'd say about 70% are using Ninja 8 now, to about 30% still using Ninja 7. And I just expect that to increase over time. So we're not going to do backwards development. All right, everybody, have a great weekend, and I hope to see you and talk to you all very soon.